The company that makes the world's best-selling humanoid robot just went public in Shanghai, and the shares closed up 460% on day one. Every write-up says the same thing, that its margins are improving. I read the actual filing, and the margin on the robots themselves has fallen 3 years running. Both of those are true at once, and the reason is the whole story. Unitree lists on the Shanghai STAR Market this week, under the code 688836. It is the first time a humanoid maker this size has had to open its books in public. The shares were priced at 150 yuan and 80, valuing the company at about 61 billion yuan. That is roughly $9 billion. Demand was extraordinary. The retail allotment came in around 1 in 5,500, the hardest new share this market has seen. So the story tells itself. Chinese robot company, first profit, everybody wants in. That version stops reading at the summary page. Here is the number everyone is quoting. Across the whole company, gross margin rose 3 years in a row. 44%, then almost 57, then just over 60. On any normal company that is a business getting healthier every year. Now here is the same filing broken out by product line. This is the margin on the humanoid robots on their own. 88%, down to 69, down to 63. The company average is climbing while its main product gets steadily less profitable. I want to be clear about this because it is the part that made me sit up. Both lines are in the same document. Nothing is hidden, they are simply never printed next to each other. So what happened to the robots? The price collapsed. This is the average selling price of a Unitree humanoid year by year. That is 593,000 yuan down to 166,000, or about $23,000. A 72% cut in 2 years. One honest caveat first. That opening year's average rests on a handful of units, so the starting point is a very small base. The decline is real either way because it traces to a product decision you can point at. In May 2024, Unitree launched the G1. It is far cheaper than the H1 it replaced. It costs less to build, and it earns a lower margin. Then in 2025, the company cut prices again on purpose. The best-selling robot became the lower-margin robot, deliberately. Which returns us to the question, if the product earns less, how does the company average go up? Because the mix underneath it changed. In 2023, humanoids were under 2% of revenue. Last year, they were almost 52%. And what humanoids grew into was the quadrupeds, the dog robots, which earn a thinner margin still. So a robot earning 63% replaced one earning 52%, and the average went up. It rose because a weakening product displaced an even weaker one. That is the sentence I would put on the front of the prospectus. The margin story everyone repeats this week is an accounting side effect, not an improvement. There is a second figure in the filing that decides how long this can keep working. Prices fell about 72%. The cost of actually building each robot fell only about 15%. You can already see it landing. In the first quarter of this year, adjusted profit fell about 52% against the year before. The part I think matters most is not a forecast about robots. It is arithmetic. Mix shift only flatters the average while something worse remains to replace. Humanoids are already over half of revenue, and little of the old business is left. When humanoids are effectively the whole company, the average stops being an average. It simply becomes the humanoid margin, the line that has fallen every year. None of this says the listing fails. It says the number people are buying at 219 times earnings measures something other than they think. At 845 yuan a share, the market just valued Unitree at about $50 billion. That is 5.5 times what the bankers priced it at this morning, on the margin we have spent this video taking apart. I have watched this curve run in software for a year, in model prices, and margins there went the same way. This is the first filing I can point at showing it in hardware. I will read the first results after the listing and tell you whether that gap between price and cost closed or widened. Subscribe, and I will bring you the numbers.